So you know. Just turned on my weekly webinar, just so you know. So you know. All right, 12 o'clock. We'll get started in about 30 seconds here. All right, let's do it. All right, so it is time for your prop trader market update. It is August 31st, 2021. The last day of August. Usually markets are pretty slow this week. I am an associated member of T3 Trading Group, which is an SEC registered broker-dealer and member of FINRA SIPC. You should carefully consider whether trading is suitable for you in light of your own financial condition. Position disclosure here. Some of you guys might remember that I was short the TQQQ last Tuesday, keeping a tight stop loss on it. I am no longer short the TQQQ. This market is so bullish. A few new longs, a couple of those are from today. Fubo, Jumai, Roblox, I got involved in yesterday. So let's take a review of our markets here. Well, first, about me. I'm senior trader and registered principal at T3 Trading Group. I've been with T3 for over a decade. I have mentored well over 100 professional traders and managing a group currently that I believe is in excess of 100 traders. Big into martial arts, former professional kickboxer, love skiing, love trading, and that's pretty much it. Today I'm going to be talking about charts, markets, stocks, all the good stuff, and then I'm also going to be talking about T3, how you can potentially be involved with my team of professional traders, or how you could potentially become a professional trader yourself. So let's just jump right into the fun stuff. Let's talk about the markets, let's talk about charts. Okay, so let's just do a quick little recap here to the mid part of August. So I had become concerned here August 13th or so. August 16th was a Monday, and I actually started to not lighten up yet, definitely not start, flipping short or putting loads of shorts on. But I started to really into that week, that previous week, the week before, I guess, August 16th. I started to say to myself, you know what, no new long positions. I was just getting a little bit concerned about the market. Obviously, those concerns were ridiculous because after this little dip, we're still at all-time highs. Market at all-time highs, not a good idea to be coming in and doing a lot of short selling, but I reached the point here where I just wanted to be a little bit more defensive with my portfolio. I tightened up some stops on some things. I got out of Amazon, I got out of Apple, I got out of an oil stock that I had a decent sized position in, and that was right in front of this pullback, which was right in front of OptionsX. So this was then the third month in a row where we saw a sell-off, a small sell-off into options expiration, and then immediately that was bought back up, followed by 2 days of rest and a price correction. Off that price correction into the ADMA, we exploded here. Friday last week was a really big day. Yesterday showed some continuation, particularly for the NASDAQ, and got us back to being a little bit extended to the upside. Friday was particularly interesting from the perspective of the IWM, of the Russell. Well, really, the Russell's been interesting since this low has been put in mid-August in front of options expiration. Since this low, and granted the Russell had sold off the most, was the most relatively weak and the most extended to the downside, but basically since this low, the Russell has shown relative strength to the NASDAQ almost every day. So 1, 2, 3, 4, 5 of these 6 trading sessions ending Friday of last week, the Russell showed relative strength to the NASDAQ 5 out of the 6 days, and that culminated with a huge day for the Russell on Friday. We broke 2 major resistance levels, 222 and 225 in the Russell, all on one day on Friday. Massive upside day. This gets me really excited because it's almost an interesting, market environment, well, it's always an interesting market environment in one way or another, but one of the interesting changes that I feel like I've started to see in markets now is, the NASDAQ was always like the speculative part of the market, right? The tech stocks. The tech stocks can be really dangerous. They can give you a lot of profit. They can give you big losses. So I feel like historically that's where speculation has always been. And I feel like we've actually started to get away from that a little bit, because these mega tech stocks, these FANG names, Apple, Amazon, Facebook, Google, they've almost become defensive stocks. Like when the market is scared in other places, it's like, all right, well, it's time to buy Procter & Gamble, Treasuries, and Apple. And if the market's buying up Apple, well, then the NASDAQ is going to be sustaining a bid, and then the S&P is probably going to be sustaining a bid. And that's kind of what had happened here, and the Russell got weaker. And now it seems like we see a larger correlation with speculation and the Russell. We also see a larger correlation with the Russell and value stocks. So it's interesting. What am I talking about? So, we tend to see the Russell perform well when value names like, U.S. Steel, CLF, financials, XLF, energy, XLE, usually those types of names, those sectors perform well when the IWM performs well. But we'll also sometimes see these like Palantir type stocks, Jumai and Fubo, and 3D printing names like Triple D or NNDM, or marijuana stocks. They seem to actually now catch a little bit of a bid sometimes when the Russell catches a bid also. So it's just interesting to see the dynamic here on how markets have changed over time. And for me, as much as I was saying that, like, your Palantirs of the world were in bubbles, January, February, I want them to be trading like this, though, because this type of movement, this type of volatility, leads to a lot of opportunity for my team and I as professional traders. Even as I'm short AMC, I want AMC to be going up, really. Because when AMC is ripping higher, like it started to do recently, this chart's looking pretty good. When GameStop is ripping higher, this chart looks fantastic right now, by the way. Fundamentals totally aside, this chart looks fantastic. When these stocks start rocking and rolling, a lot of times is when we're seeing the IWM catch a little bit of a bid at the same time, and all those speculative stocks just breed a ton of trading opportunity. So that's definitely what I want to see, and this is kind of happening a little bit on what is traditionally one of the slowest weeks of the year. This week and next week are usually really slow, and yesterday's trading session, midday, just seemed so anemic. We had a nice bid in the SPYs early on in the day, and then we just went sideways, and it was just garbage price action. If you were doing anything related to the SPY or any stocks that are related to the S&P from 11 o'clock on, I mean, you're better off being on vacation, which actually is usually where I am on this week. This week of the year, almost every year I go on vacation, like this week and next week. Did not do that this year because I basically was on a 2-year vacation traveling around the country, and I just never really planned anything for myself. So it's interesting to see that some of these speculative names, though, are waking up a little bit here as we are just in what is traditionally such a slow 2-week period of time. AMC catching a really big bid, GameStop catching a really big bid. We called this GameStop out this morning, by the way, for a buy through 167. Just a beautiful trade, obviously, that's now given $50+ worth of reward for anybody who took that breakout. I kept talking about this 167 level, and the volume came in a huge way. The animal spirits have come back alive, and that's what I want to see. I got involved in Fubo today. This is my trade of the day. Break of $28 is really what we were looking for as a team. It got hit with a little bit of positive news this morning. That's given decent follow through for about $1 or so. I still maintain my position in that. And again, this is what I'm looking for. I'm looking for these stocks to be, rocking and rolling. Roblox took a little bit of a hit yesterday and also got downgraded because of the news with China limiting video game usage, but we had a decent little capitulation buy setup. This is actually a trade that I like, so let's just talk about this setup here a little bit. So first of all, it's easier money. Let me just start by saying this. It's easier money to be with the trend than against the trend. And this is why, by the way, to go back to the markets real quick, from a big picture trading perspective, what I keep telling the team is we got to err to the side of the longs. I'm like a broken record. Guys, we got to err to the side of the longs. Shorting this market has been so difficult. And I did short the TQQQ and ended up losing a small amount of money on it. I got stopped out on Friday last week. Thankfully, I did get stopped out because look at this, right? If I was still stuck in this with 144.50, it'd be $5 out of the money on it right now. And that, by the way, is like the big pain trade right now. I feel like the hedge funds are involved in. They're all short as a hedge, I guess, on the S&P and the NASDAQ, and they're just getting like kind of totally blown up on it. So I keep telling my team right now, less is more with this trading environment. Because we are trending higher. It's a difficult week. We're a little bit extended to the long side, so we don't want to be too aggressive with our buying. We also don't want to be doing much shorting in such a bull market. Shorting in this environment, guys, has just been so difficult. So we're trying to pick our spots. So a trade that I like here that I'll talk about real briefly just to give you guys a setup that you can kind of add to your playbook is the short time frame capitulation buy setup in a stock that you otherwise really like. You have a long thesis on it from a fundamental perspective, or even more ideally, you have a technical uptrend on like a daily chart or a weekly chart. So sometimes what you'll see is you'll have a really nice technical uptrend on a daily chart or a weekly chart that's obviously showing you strength. A great general rule, by the way, is just when you are monitoring a trend for the market, just assume it's going to last forever. That's kind of always your best bet, especially with those big picture trends, right? Just look at where the S&P's been and what it's been doing over the last 10+ years. Obviously, trends will not last forever, but I promise that if you kind of take that thesis and assume that trends are going to last forever, you're probably going to be making more money than you would be if you're just assuming that you could pick the top or bottom of every trend. So one of the things I like to do, though, is we need to pay attention to trends on multiple time frames. So let's assume for a second, and this is actually not exactly true, but let's assume for a second, and I'll talk about why I do like it big picture. But let's assume for a second that Roblox is in this beautiful uptrend on like a weekly chart or a big daily chart. And then it's had a pullback over the course of a few days, and that pullback then culminates on the small picture with this type of price action on the small time frame. This is what we call a hammer capitulation buy setup. So basically, look at it. This is a 5-minute chart. 1, 2, 3, 4. This is the 5th red bar here in a row. And it is very fast to the downside with increasing volume. So volume is picking up and maximizing at the bottom, which is what we want. And by the way, we don't know that this is leading to a bottom. And one of the things that I really don't like, people are probably inclined to talk about this as a reversal trade. Even my man Scott Redler, who I'm a huge fan of, that I work with over here at T3, I've learned a ton from Scott over the course of my trading career. He has something that he calls a red dog reversal trade. I kind of want to reach out to Scott and be like, Scott, we got to rebrand your red dog reversal to a red dog retracement, because that's really the right term that you should be looking for. If you're going counter trend or counter momentum on any time frame, like what I'm describing here is a long trade in Roblox, really all you can look for, all you can really expect is a retracement back higher. And then the most likely thing that's going to occur is actually continuation of the trend to the downside after you get that retracement. So thinking about like that red dog reversal, which is probably famous now, everybody knows about it, so I assume that the viewers here on the YouTube video are all at least somewhat familiar with it. That red dog reversal is like 3 big down days in a row, or at least 3 big down days in a row, followed by a breakthrough the previous day's low, and then it comes back up, and there it is, there's your red dog reversal trade. But again, the most likely thing, a great general rule to remember in trading, is that trends are going to continue for much longer than you ever expect that they will. And again, the rule I've been, not rule, but the thing I've been kind of preaching lately is just assume that the trend you're looking at is going to last forever. And you'll probably make and save yourself a lot more money than you would otherwise. So really, it should be the red dog retracement. And really, when I'm looking at this, I could come out here and I could be a hero and I could try to sound cool and be like, this is the bottom, this is where the reversal happens. You don't know that. This is a retracement trade after a really big down move on this time frame. Now, what can lead to this retracement higher becoming a reversal is your other time frames. So if Roblox on its daily chart has an uptrend, then this smaller time frame retracement higher of the down move then has a significantly higher probability of actually becoming a full-on reversal and continuing up. But again, all I can really look for off of this buy, and I'll explain it in detail, including the execution in a second, all I can really look for is a retracement back up. To where? To certain target points that I'll speak about here in a second. So, what's going on here with Roblox? Well, I know on this time frame that I'm looking at, there are more sellers than buyers right from the beginning of the day. That's pretty obvious. Big red bar, red bar, red bar. Volume is increasing on the way down, and extension is increasing on the way down. And this is one of many reasons why your extension rules are so important. So for me, I've talked about this so many times, the way that I measure extension is the space between where the stock is currently trading versus the space between the 8 and 21 EMA. The space between the 8 and 21 EMA is the space that I consider to be the technical equilibrium for any stock or any market that I'm looking at. So if I've got Roblox at $80 right here, it's trading at $80, and at that time, the 8 EMA is at 82.54. I know that Roblox is extended by $2.50. Really, we want to think about this not just in absolute dollar term, but we also want to think about this in terms of percentages. So down $2.50 away from the 8 EMA in an $80 stock is like what, 30% or something like that? It's a really large percentage that this thing is extended, but it's also a very small time frame, right? It's just a little 5-minute chart that we're looking at. An extension in and of itself is not a reason to buy, okay? Just because it's down a lot and it's moved far away from these moving averages is not a reason to buy, because stocks or markets that are extended can always become even more extended, especially when there's volume. Let's look at some quick examples, right? The AMD, where we actually came in and shorted at 122 on this day. Look at this. You could have argued that AMD was extended at 106, then it was more extended at 112, and it didn't even top until 122.50. One of my favorites, JKS last year. JKS started a run at $20. Easily you make the argument at 33, it's extended. Next thing you know, a few days later, it's at 48, it's even more extended. Next thing you know, a couple weeks later or so, it's at $70, it's even more extended, and it didn't actually top out until 90. So you just can't just throw offers in and blindly go short JKS just because it's up too much. That's not what we're looking for. But we pay attention to that extension and we look for signals. What are the signals? Well, one signal is that increasing and maximizing volume, which again is also not a reason to trade, it's a layer of probability. But the trade itself is actually off of this candle right here. This candle we call a hammer doji candle in candlestick analysis, which is something I consider to basically be a subset of technical analysis. And what we need to do is we need to assess supply and demand off this candle. So what do I know? First candle, who's in control? Sellers. Second candle, who's in control? Sellers. Third candle, who's in control? Sellers. Fourth candle, who's in control? Sellers. Look at the volume starting to pick up. Fifth candle, who's in control? Well, the candle starts and sellers are still in control from this previous bar. They bring it all the way down to 80 bucks. And then what happens at 80? How is it possible that the stock goes from 80 and closes at 80.50? Well, for this 50 cents into the close of this bar, buyers were in control. So when this candle actually closes, in that moment, buyers are in control. And my expectation is that buyers are going to stay in control up until a certain point. And what am I looking for? What point am I looking for? Well, that's where I go into my retracement rules. This is how I create targets for the trade. What I'm expecting is this high volume hammer. And again, the hammer here is the actual candle, where the candle itself is telling me that it went from sellers in control to ending with buyers in control. I'm expecting now those buyers to be able to remain in control for a period of time so that the stock can actually give a retracement or a price correction of the downside extension back to equilibrium. So I'm looking for a move to somewhere between this 8 and 21 EMA, which is the space that I consider to be technical equilibrium. And when this occurs just like this, you tend to have a probability of success, from my experience, that's a little bit greater than 50%. So a little bit more than 50% of the time, when you have this pattern show itself and this candle ends with buyers in control, you're going to get a retracement higher back to that equilibrium area, a little bit better than 50% of the time. So that is probability of success, right? I can now expect a move to at least basically this 8 EMA at least 50% of the time. So if I can get a move, let's just make the numbers really easy here. If I can get a move back up here to at least 50% of the time, what do I need my risk reward to be? Well, I need my risk reward to be at least 1-to-1 if I have a 50% probability of success. So what's the execution on the trade? Well, the bar here closes. I know buyers are in control, so I come in and I buy. My stop loss, which we refer to on the desk as an out, is going to be the low. Well, the low is $80 exactly. The close of the candle here is $80.50. When I took this trade, I think I literally bought $80.51. Stop loss again is that low. So I'm coming in with 50 cents worth of risk. What does that mean though? For my reward, I need the 8 EMA to be at least 50 cents above where I entered. So I need the 8 EMA to be at least $81 in order for this to be a good trade. Again, why? Because I have a slightly better than 50% probability of getting a move back to the 8 EMA, and my risk reward therefore needs to be at least 1-to-1 in order for this trade to make sense for long-term consistent profitability. Well, in this case, the 8 EMA at that point was at about 82.50. So that is 4x my risk. And that's just on the retracement. 4x my risk. And guess what? 4x my risk really isn't that amazing. It's good. It's definitely good, especially if I've got a 50% probability of getting it. I can make money in the long run. But just to repeat this, the easier money in trading is with the trend. Because when you're trading counter trend like this, when you're going long a stock that had broken down, your reward is inherently more limited. Because you're going to be, because again, I can only expect so much. And then what am I expecting? After I get my retracement higher, what's the most likely thing that's going to occur? Assuming I don't know what the daily chart looks like for a second. What's the most likely thing that's going to occur? Back down. But if I'm with the trend, if I bought the, one great trade that, we had as a team here, well, there's been several, but, Apple on the break of the daily triangle here to the upside, right? Apple was in a nice uptrend after it broke out from, where was that breakout that we're looking at in this thing? Which day was it? I believe it was this day right here. We had this breakout in Apple through 128. It was a beautiful trade. Led to an uptrend. That uptrend topped out, led to a bullish consolidation pattern. If you're buying the break here on this day, if you're buying you're buying August 12th, that break, what is your reward, right? Everyone thinks about risk reward. Okay, whatever your risk is probably buying 146.75 with the stop loss at 145.83. So let's just say, even though it's a little bit less than that, let's just say you have $1 worth of risk. What's your reward? It's at all-time highs. The reward is unlimited. You're with the trend. You're long. You literally have unlimited reward. And I know people might be rolling their eyes at unlimited reward, but look, one thing I like to remind myself when I look for perspective, let's look at my entire career with T3, right? Go back to 2010. Apple split adjusted was once an $8.75 stock. Apple split adjusted was once a $14 stock. Apple split adjusted was once a $30 stock. Apple split adjusted was once a $70 stock. At one point in time, the stock touched that price for the last time that it would ever touch it ever again. And maybe you just bought that price that time, and Apple never sees that price ever again. And you probably weren't thinking when you bought some breakout trade back in 2013 at $18 that this thing could be 153 one day split adjusted. But guess what? Here it is. And maybe in 7 more years from now, the way that this thing went from whatever $15 to 150, maybe 7 more years from now, you had taken this ascending triangle breakout here at 147, and now it's a $1,500 stock, right? Reward is unlimited when you are with the trend at all-time highs. But when I'm taking a trade that's counter trend, counter momentum, reward is limited. You know, I got all these areas on the way up I need to be concerned about, right? Then first it gets back to equilibrium, it's going to be difficult for it, and then even if it reverses on the small time frame, you know, maybe there's going to be resistance eventually at $85 again, and then resistance at $87 again, and then I've got all my, you know, daily chart resistance levels on the way up, right? $87, $90, $94, $100. Those are all resistance levels that act as potential roadblocks for my stock on the way up that limit reward, right? So just to say it again, it's always easier to trade with the trend. And that's primarily what I'm focused on, but not entirely. I do take some of these trades that are counter trend. Particularly, I like smaller time frame counter trend trades when I'm either having a bullish fundamental thesis on the stock or I've got bullish big picture technicals. Right? I mean, if you think about it, the break of that ascending triangle, the break of that symmetrical triangle that I'm talking about in Apple here is technically off of a pullback, right? It was at 150. Now you're buying 147, right? You're kind of buying a dip, even though you're buying it at this point on the way up. So the roadblocks here are a little bit different. So just to, again, go over this trade setup, this is our hammer capitulation buy setup. You really want to utilize it only in certain circumstances. You really want to have the bigger picture trend on your side, or in my case, I have kind of what I call a qualitative thesis that's bullish for this stock, which is on my side. And then you want to have the capitulating volume. Maximizing volume is going to mean a higher probability of success. I have volume confirmation. I also need to have appropriate extension, because without the extension, I'm not going to be able to get the risk reward necessary to make this a consistently profitable trade in the long run. I need all of those things to come together. And then what am I looking for? Target number 1 is that 80 EMA, which is the lower band of equilibrium in this case. Target number 2 is the 21 EMA, which is the upper band of equilibrium. I have to keep in mind that these are sloping down as I'm trading up. So if I get a time correction, if these go sideways, it's one case in which this trade might fail for me. I get a time correction instead of a price correction. Again, this candle signifies it's more likely to get a price correction. But again, we're working in probabilities. So maybe it's a time correction. These moving averages catch up. That then becomes a bear flag, and I get continuation of the downside. I get stopped out of my position. But target number 1, all the same, is going to be the 80 EMA. Target number 2 is going to be the 21 EMA. And then maybe, just maybe, that retracement higher becomes a reversal. And then if it becomes a reversal, then I can start looking at these bigger picture resistance levels that I need to pay attention to on the way up. And then for that, because it's lower probability, because it's a counter trend or counter momentum trade, well, guess what? Once you get a reversal confirmed, which we didn't actually get until the afternoon, once I get a reversal confirmed, now guess what? I'm with the trend. And that's really what I want to be to begin with. I really want to be with the trend. So I don't want to pick a bottom here, but I want to let the bottom come to me if it's going to be it, right? So what I'm picking is not a bottom. I'm picking a high probability spot for a retracement higher. I am booking profit into that retracement to make sure that there's no way I could lose money on this trade. And then once I have that, I can keep a smaller percentage of my position just in case that retracement higher naturally becomes a reversal and it can work its way up and then reverse for me and start going higher on the big picture chart. So that is how I got into Roblox yesterday. Roblox got downgraded this morning, unfortunately, I think by Jefferies, so it's been under a little bit more pressure today than I otherwise would have liked, but it's going to be something now that I'm going to be paying attention to versus $80 and kind of sticking with it, at least for the foreseeable future, unless something happens where my game plan changes. So that's that. So got involved with that yesterday, got involved with this Fubo. So this is another one, right? This is a momentum name. This go back to those speculative types of stocks I was talking about before. Your Palantirs, your Jumais, your Fubos, your Triple Ds, your Tilrays, right? This is a continuation trade when there was some news through $28. So that was a solid little breakout here in the beginning of the day. I was originally trading it versus the pre-market low of 27.30. Then the intraday low showed itself at 27.59, so able to raise kind of my stop loss to that price. And now some people on the team I think are involved in this, or maybe using this 5-minute chart low as a trailing stop. I'm keeping mine a little bit looser at this point in time, but this Fubo is starting to look pretty good as well. So that is basically all I've got for you guys today. You know, again, every Tuesday I try to give you guys an update on you know, what my team is doing and how we're viewing the market, how aggressive we're trying to be. It's obviously clearly a bull market, but it's an interesting week here because we're past Jackson Hole, we're past earnings season, so things broadly are slowing down. So we're being selective and we're really trying to pick our spots with certain circumstances, not being overly reliant on the market to come in like in a Fubo type situation to be able to create profit for ourselves. And then there was also a little setup that we did today, a little lesson that we did on what we call the hammer capitulation buy setup. So with that said, let's talk about how you can become part of my team. So first of all, my team and I are all involved in the ProDesk virtual trading floor. So one thing you could do if you just want to become part of the team, but you're trading on a retail account or whatever it is you can just reach out to a T3 Live representative and ask about how you can get involved with ProDesk. Or you can get my virtual trading floor for free if you have a trading account with us. We have retail trading accounts and we also have professional trading accounts. What I'm primarily going to be talking about right now is professional trading accounts with T3, but you do have multiple options on how you can be involved with me and my team of professional traders, our daily morning and afternoon meeting that we're doing each day, where we discussed Fubo through 28 in the morning meeting. You want to get your hands on that idea generation, get involved with the team. So T3 Trading Group is one of the largest proprietary trading firms in the United States. We have hundreds of licensed professional accounts. We've got 4 physical offices, including our New York City headquarter office. With that said, all of our offices are currently closed to traders, still because of COVID. With that said, I'm back in the New York office right now. That's where I'm talking to you guys from. But we've got remote traders utilizing that virtual trading floor located all throughout the country. T3 Trading Group is an SEC registered broker-dealer and member of FINRA SIPC. So the biggest downside, in my opinion, to becoming a professional trader is that you have to go through licensing. So you got to pass a background check. You can't be a criminal, which I don't really want to work with criminals anyway. But you also have to be licensed. You have to pass the SIE, Security Industry Essentials examination. And you have to pass the Series 57, which is the Professional Proprietary Traders exam. We'll sponsor you for the tests. We'll provide you with study materials, but you still got to study. They're not the most difficult tests in the world. They're not the easiest tests in the world. Once the exams are passed, that is when we can get started with trading. We have 4 different trading software options that are available now. We've got Lightspeed, Tachyon, Sterling Trader Pro, and Wolverine. So we'll get you set up with a demo account initially before we switch you over to the live account. We have equity trading, we have equity options trading, we have futures trading, we have options on futures. Personally, I'm an equities trader. That's my focus. I speak with a lot of folks who are options traders in their retail accounts. That's just fine. If I was trading in a retail account, I probably would be an options trader too. And that's because of the natural leverage that is inherent in the option product that you can't just get in a cash equity account or even a margin equity account. But as a professional proprietary trader, the company here, T3, gives me all the capital access I could ever want to trading. So my thought process has always been, why do I want to trade options, which are a less liquid product and subject to time decay, just for capital access when T3 has already given me capital, typically at 20 times my money for equity day trading and 8 times my money for overnight positions. On top of that, you're going to get education for free. You're a professional trader here with the company. We are incentivized to see you succeed. So you're going to have access to my training program. I do a daily morning meeting every day at 9 a.m. through the virtual trading floor, an afternoon meeting at 10 after 4. Every afternoon meeting ends in a group Q&A session. It's an opportunity for anybody on the team to ask questions about anything that's trading related. My team and I over here, we're doing everything we can in our power to make traders as successful as possible. But at the end of the day, it is a risky business. You should be aware of that. Not everyone who pursues it becomes successful. And part of what makes the business difficult is that you're making all of your own choices and all of your own decisions. I'll tell you what I'm involved, what I'm involved with, what I'm trading. But just because I'm buying something doesn't mean that you can just close your eyes and press the buy button. First of all, I'm wrong all the time on my trades, just as every trader is. You speak to anyone and you speak to anyone who never has a losing trade, you should just please run the other direction. There is no such thing as 100% success rate on trades that you take, and no one makes money every day in this business. I don't care how good you are. I mentioned this already, so you will be required to fund a professional account, and then you're going to get capital access, typically starting at 20x and 8x, and then you are paid through a monthly profit split. And if you're an experienced trader, T3 is also the place to be because of our size. You want to put a couple $1 million into an account because you want access to $40 million, probably not a problem. Reach out to me. There's my email address again in the slide. It'll come up again at the end. And again, you're a professional trader. We're incentivized to see you succeed. You're going to get access to my virtual trading for free, my training program for free, Scott Ruther's a virtual trading for free, and the Rather All Access newsletter for free. You get all that if you get involved with T3 now. So reach out to me or reach out to info@t3trading.com if you want to become a professional trader, and either myself directly or someone on my team will reach out to you to speak with it. You can also reach out to a representative over at T3 Live if you just want to get involved with my team of professional traders that are involved in the ProDesk virtual trading floor, which is where I am running the morning and afternoon meeting each day. With that said, I hope everybody learned a lot. Last day of August here. I hope people had a good summer. I want price action. I'm so pumped for summer to end. I know it's such an unpopular thing to say. I want to be skiing in the powder. I want to get back to Idaho and Wyoming this winter and ski the POW. I want the price action to get better. These summer doldrums of the market, I'm sick of it. Let's get that cold weather back. Let's get this trading price action back. Let's get the snow to come. Summer's over, hopefully soon. I'll see everybody next week, or if not sooner, if you're part of the VTF. Get out there and make sure to manage your risk, because it's the key to the business.